So those are 5 alternatives to buying physical gold. Again, I'm not saying that buying gold's a bad idea. I actually think it's a good idea. I think you probably should have at least part of your assets in gold. But it's not the only way to achieve the outcome of preserving your wealth and hedging against inflation. Now, I don't have anything against owning gold. I own gold. Practically everyone in my circle owns some amount of gold bullion, whether held offshore or just kept in a safe somewhere. So I'm not saying don't buy gold. I think gold definitely has its place. With that said, I'm a big fan of diversification. You know, if you're trying to make money, then investing in one particular asset and hoping it performs well is probably a good idea. But if you already have wealth and you're trying to preserve it, then diversification really is key. So that's what this video is about. Accomplishing many of the same goals that you can achieve through purchasing gold, but doing so through other assets that do provide many of the same perks, but also are different. You know, some of them, gold for example, will not give you rental yields. So that's what we're going to be talking about today, 5 alternatives to buying gold. So first, let's talk about some of the positive aspects of owning physical gold, which you can also achieve by owning some of the other assets that we're going to be talking about in this video. First, of course, gold is a hedge against inflation, which inflation is more worrying than ever in recent years. It's rising across all major economies, including the US. Inflation is at multi-decade highs. So yes, hedging your portfolio against inflation is now more important than ever. Secondly, and this isn't really the main reason people buy gold, is appreciation potential. Gold really is a hedge against inflation, more so than an appreciating asset. Of course, it doesn't pay dividends, but if you do look at a 30-year chart going back to the early 1990s, gold has appreciated in value since then. Granted, it's been kind of stagnant the past decade or so, since the 2008 financial crisis. It's kind of hovered around the 1,500 to 2,000 level and hasn't really appreciated much since then. A lot of the people trying to sell gold as an appreciation asset will show you a 30-year chart of gold. It'll start in 1990, but that doesn't really tell the whole story. If you look at a 50-year, 60-year, 100-year chart of gold, then you'll start to see that its appreciation over a 40, 50-year or even longer period is not quite as strong as what people would show you in the charts. People are trying to, you know, whose sole business is trying to sell you gold. So if you're looking at appreciation, gold has done well over 30 years. Definitely not as well as stocks or real estate, but there is some potential there, in addition to its obvious hedge against inflation. Its position is a hedge against inflation. So now let's talk about some of the negative aspects of buying, selling, owning gold bullion, which they certainly do exist. The most clear one is that there's a buy-sell spread you have to deal with. When you buy gold, you're generally not purchasing it at spot price. You're maybe buying it at 5, sometimes as high as 10% or so above spot price. And when you sell it, you're perhaps selling it at below spot price. So if you go into a dealer and you say, hey, I want to buy gold, and they sell it to you, you immediately say, okay, I want to sell this gold back to you. You might immediately be losing 10% simply based off of the buy-sell spread. That's not an ideal situation. Secondly, you have to store the gold. Gold's only really as safe as, you know, the place you store it in. So if you keep it in your safe in your home, well, I mean, maybe the safe in your home is very safe. Maybe it's not so much. So that's something worth considering. If you're storing it at some sort of offshore gold storage facility or a safe deposit box at a bank, you know, they obviously charge some sort of monthly fee. So that's something that's going to be eating into your costs. And, you know, again, you're not going to be making money off of gold in most cases unless you sell the gold back. So gold does not pay rental yields. If you're going to be making any money off of it at all, and it's not just purely an inflation play to you, if you're seeking some amount of appreciation, you're not generally going to get that unless you sell the gold. Some people hold physical gold bullion just because they think society is going to collapse and things are going to move towards a barter-based economy. And I mean, first off, I think that's a very unlikely scenario. Secondly, I think if that did happen, you know, people would have more important and pressing things to worry about than hedging their portfolio against inflation. You know, I think at that point you should probably be more concerned about surviving. And I think if, you know, we did move towards a barter-based economy in the face of some great economic collapse, I don't think gold is what people are going to be trading in. I think, you know, people will be trading in food and cattle and cars and oil and the necessities of life in such a case. So no, I don't think society is going to collapse and people are going to be suddenly trading in gold. In fact, I think the first investment on our list is probably more likely for people to barter with if, you know, such a collapse were to happen, which is silver. Silver, of course, is much more plentiful than gold. It's less expensive. Right now, you can buy an ounce of silver for about $25 as of the mid-2021. Gold right now costs about $1,800 per ounce. So silver is about 60 times cheaper than gold. But there's only about 10 times more available silver reserves in the world. There's definitely far less of a supply of silver reserves compared to gold reserves when you take into account the price difference between them. The second asset on our list is cryptocurrency. And of course, crypto has been around 10, 15 years or so, so it doesn't have a long established history compared to the other assets on our list that, you know, some of them you can mine out of the ground. And with that said, for the time crypto has been commonly used, it's been proven as a very stable hedge against inflation. It did very well back in 2020, climbing from about $10,000 per Bitcoin. We'll talk about Bitcoin just because it's the most commonly used cryptocurrency, reaching highs of 60,000 last year. Of course, there are all sorts of other different cryptocurrencies, from Ethereum to Dogecoin to Litecoin, and there are literally thousands of cryptocurrencies, many which probably aren't worth investing in, but some of them which are. But yes, that's one aspect that cryptocurrency has that gold doesn't, is that it's much more of an appreciation play. So of course a lot riskier, but the appreciation potential is proven and is there if you're willing to take a bit more risk. You can now also generate some amount of interest through staking your cryptocurrency. Practically all of the top crypto platforms, from Binance to Kraken and even Coinbase, which is oftentimes a bit late to the game, will allow you to stake your cryptocurrency by locking it in for a set period of time, anywhere from a few days to years, and you can get interest based off of that. And of course, when you own cryptocurrency, there's all sorts of other benefits through owning crypto, which I'm not going to really get into because this video isn't about cryptocurrency, but everything from you know, being on the blockchain to being verifiable and being more secure. You have, of course, all of the benefits which come from owning cryptocurrency in the first place. The third asset on our list is real estate. And of course, there's many different types of real estate markets in the world. If you're buying property in Istanbul, Turkey, then that comes along with a completely different side of fundamentals and opportunities than if you're buying property in, you know, Tokyo. It's even denominated in a different currency, of course. Even within the same country, if you're looking at Dallas's real estate market, then that of course comes with you know, a different set of opportunities than buying in San Francisco. And within the same city, I mean, even Beverly Hills real estate market is going to be quite a bit different than North Hollywood's. So real estate is a very diverse asset, and it's not just, oh, invest in real estate. It depends on where you're buying, it depends on what price range, and there's of course not a set spot price for it like you would if you're buying a commodity. But real estate has also proven a hedge against inflation like commodities. Real estate, of course, comes comes with rental yields. You can take a mortgage and use leverage to buy real estate, which you generally can't use if you're buying gold. Real estate has higher appreciation potential. Again, it depends on where you're buying it, but generally real estate markets, global real estate markets, you know, in top tier cities like London, New York, Tokyo, Bangkok, etc., have performed better than gold over the past 20 or 30 years. The fourth asset on our list are electric vehicle metals, nickel, cobalt, and really, I suppose, anything used in the production of electric vehicles, which there's all sorts of goals that not only, you know, different nations have. China, I think, wants to make 80% of their vehicles electric by the year 2030. Every company from Volkswagen to Honda and Toyota, and all of them practically, they want to produce a certain amount of electric vehicles by year X, whether that be 2030, 2050. The point being is that we're definitely going to be seeing a larger proportion of electric vehicles on the roads, which should lead to an increasing value of metals that are used in their production, like nickel and cobalt. The downside to this is that nickel and cobalt, while they do have appreciation prospects, are relatively cheap metals. We're not talking about, you know, $1,700 per ounce or even $25 per ounce. We're talking about, in some cases, pennies or nickels, quite literally per ounce. So if you're buying nickel or cobalt in bulk, you're going to have huge bags of them, and it's a matter of, okay, where are you going to store this? If you have a, you know, some sort of large property or a warehouse, there are some services that will store nickel and cobalt and electric vehicle metals for you. Obviously, they charge some sort of a price to store them, and it's also the sort of thing where you're not going to be making money on it until you sell it. There's no rental yields with cobalt. So those are a few downsides of electric vehicle metals, even though they, in my opinion, have a higher appreciation potential than physical gold. The fifth and final asset on our list are simply buying other currencies besides the ones you normally use. Let's say if you're lacking confidence in the US dollar or the euro, consider perhaps buying some Swiss francs or Singapore dollars or Korean won, all of which are normally considered very stable currencies and have proven their stability over the past decade. Of course, if you make an investment, whether in stocks or real estate in a different country, you're also not just investing in another country, you're also investing in their currency. Of course, you know, South Korean stocks are denominated in Korean won, so is any property in South Korea. So consider either buying a currency directly or assets denominated in such a currency if you want to diversify outside the one you normally use. So those are 5 alternatives to buying physical gold. Again, I'm not saying that buying gold's a bad idea. I actually think it's a good idea. I think you probably should have at least part of your assets in gold. But it's not the only way to achieve the outcome of preserving your wealth and hedging against inflation. Those are just 5 other alternatives that you might want to diversify part of your portfolio into.
So people ask, Andrew, how do I get the most out of Nomad Capitalist? How do I begin my Nomad Capitalist journey? The first thing people do is they start right where you're at. They watch YouTube, they listen to podcasts, they read articles at nomadcapitalist.com. We've spent years creating thousands of pieces of free content so that you can get the vibe from someone who's actually done this, from someone who's actually been in your shoes. What they'll do next, they'll get a copy of the book. You can find it on Amazon. It costs a few bucks, and while it's not going to give you all the secrets, it's going to, again, give you more of the vibe. You're going to learn a lot of the things that I've learned. You're going to learn some strategies you can employ, and you're going to get a lot further in your journey. From there, if you are the 7- or 8-figure entrepreneur investor, you can go to nomadcapitalist.com. You can click Become a Client. We're pretty busy these days, but we have availability to help a limited number of people who want to create a holistic plan, something that I think is so important. So if you want to do that, go to nomadcapitalist.com, click Become a Client, learn more about how it works and how we can help you.